Have you changed your allocation, your bullish thrust over the last 3-4 days?
It is tempered, no question about it. The fact that the dialogue between the U.S. and China has escalated and that we are in sort of wait-and-see mode of the next several weeks, basically to us tells us that the upside that we thought was possible, we have a year-end price target of 3,000, but we said if everything goes right, China negotiations, Brexit, and the Fed plays along and remains accommodative, you could move to 3,400. That upside is truncated because of the developments of the last week.
I want to show Julian Emanuel's world here, folks. Come on in on this. Good morning, Bruno DePere, and all of our quantitative research at Bloomberg. This is one of the coolest things in the terminal. This is dollar renminbi and its guesstimate of volatility of the market into the future. And this red tip up here, Julian Emanuel, that is flat out the idea that we're going to see a weakening yuan. When you look at your assessment of equities, can you believe in the certitude of some of these trade vectors that we're seeing?
No, I think actually the weak yuan theory is probably going to be disproven this time. Because if you think about it, the Chinese reaction function should be different. In 2015, when you had these kinds of strains, you weakened the currency to help the exporters. The Chinese calculus is completely different here. You want to backstop the consumers. And so what you don't want to do is let the currency weaken too much, importing inflation for the Chinese domestic consumer. So we think, and that's part of the story of this slight decrease in Treasury holdings, that the Chinese government is incentivized to allow the currency to depreciate very slowly, if at all.
Okay, but Julian, is there a concern about capital outflows, and will they stem that?
There definitely is, but again, you know, when you take into consideration their ability to, you know, massage the rules at the margin, along with, you know, currency reserves, and again, this potential to sell U.S. Treasuries, the expectation is that the government will find a way to cause capital outflows not to be the sort of headline-grabbing event that we saw again going back to 2015 and 16.
What should we worry about in China? Should we worry about increasing debt? Should we worry about, you know, a possible recession despite consumer demand holding up?
We should worry about a possible recession. I mean, by all rights, you know, growth closer to 6% in a lot of ways is recessionary. And if you look at the course of how China has been over the last year, it really has been a Western-style recession progression, we call it. Essentially, the stock market topped a year ago. Stimulative measures have come in. Stocks have bottomed. The question is the data going to turn?